Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. So, half an hour webinar where I will tell you what's going on the markets, and we will look for the best trading occasions on the market right now. Let me switch to the chart, and first, obviously, as always, let me speak a little bit about fundamentals, about the most important news on the market, about the main drivers, about the main data influencing the markets right now. And as you can see, not by accident, I turn on the cable, which is British pound to the American dollar, because today, a few hours ago, we had CPIs, so an CPI, which is inflation, consumer inflation from UK, and 2.7 was anticipated. The number that we got was 2.6, so slightly worse than expected. But as you can see, the reaction on this data is really strong. What we're gonna have today as well is core retail sales from US. Very important data for American dollar. So we should get movements on the American dollar here for sure, and actually on the whole market, because retail sales is very important data. Apart from that, in many European countries, we do have bank holidays. So the volatility in Europe, well, apart from from British pound to American dollar, but in general the volatility is a bit, liquidity is a bit lower. Volatility is quite alright, as you can see. For example, daily change on euro dollar is 70 pips, which is not a low value. Apart from that, guys, you know that from the beginning of the week, actually it started a bit on Friday, we do have a continuation. We do have a switch to risk on mode. So for the last week it was risk off mode. So traders were avoiding the risky assets like stock exchanges, shares, emerging markets, currencies, and traders were buying safe havens like precious metals, or for example Swiss franc, Japanese yen, those kind of currencies, Bitcoin for example as well. Currently we do have a comeback to the risk on mode, well, because nothing happened over the weekend. This conflict between North Korea and America didn't escalate over the weekend, and now so traders actually are not buying the scenario that there will be a war at the moment. Traders do think that those threats from North Korea are just verbal interventions, let's say, let's call it like that. Also, China banned import of many commodities from North Korea, which was a positive information for the markets. It means that China supports those resolutions from United Nations, which de-escalates the conflict here a little bit, at least a little bit. So in overall, what do we have here is a comeback to risk on mode, which is especially visible on S&P 500, which I will show you in a second. But first we will start with those currencies. So this is cable, and actually on cable we got this breakout of this horizontal support. We had a long position here, which was closed on break-even point, so we earned on that, like, I don't know, 10 euros. It's good that it was closed on break-even point, because it would end up on a full loss. As you can see, here, so that's what I'm always saying, that it's better to go to the break-even point. And now we are challenging the uptrend line here, right? The uptrend line here. We can see first reaction, first contact with this horizontal, with this dynamic support is positive for buyers, because we do have a bounce, as you can see here, and maybe it creates a chance for a short-term upswing, for a short-term movement here of 60 pips to test the recent support as the closest resistance, right? It's a clear support, as you can see, almost with a great accuracy. Price tested this level. It looks very, not very good, because for the very good I would like to see a hammer here, for example. So far it's a strong bearish candle, but we just touched this level and we can see a reaction. Next important support is a bit lower, where what do we have here is a combination of 38.2 Fibonacci level, also horizontal support from the previous price movements, as you can see here, here, and also a correction equality pattern, right? So this correction was 450 pips, let's say, and there is a chance that the next one will be 450 pips as well, because those rectangles are the same. That is why I marked this spot with a green checkpoint, that when the price will get there, it will be a good occasion to buy. Next instrument is American dollar to Canadian dollar, which found a local resistance, which is 23.6 Fibonacci retracement. So far, well, I wouldn't say that there is a sell signal here, but it can be a potentially nice occasion, because we have a shooting star here, and possibly maybe a shooting star we will have here. We need to wait 1 hour for that. And that can be like a double top formation, but in my opinion we have to wait for a breakout of this lower line. Maybe there is not a wedge, it will be a flag, but breakout of the lower line here with a possible double top here can trigger a sell signal, and quite a good one, because the trend is negative, and there's always a bigger chance that the trend will be continued than reversed. American dollar to Swiss franc. We are still under the influence of this bullish engulfing candlestick formation here. It looks good. Last week we had this correction, but if you enter with a bullish, with a buy signal here, you buy here at the end of this candle. Your stop loss is somewhere here. So if you bought here, you're still on profit. It looks promising. It still looks promising, even despite the drop from the last week. As you can see, we may say that we defended this line, maybe not with the best accuracy, but it does not look good. It does not look bad. As you can see here, resistance, broken resistance becomes support. Now horizontal resistance here. Let me change the color, maybe for example like that. As long as we stay below this red line, there is no buy signal yet, but I think that breakout of this line can be a possible buy signal. Australian dollar to American dollar. Here we are approaching very good support. It looks decent. Now what we are having here is a lower line of the flag formation. Flag is a trend continuation pattern, so we should see a breakout of the upper line of this formation. But also we're having 23.6, but 23.6 from where? From this long-term downtrend, right? And as you can see, it was respected here in 2016. So if we look closer, after the breakout of those highs from 2016, actually now we are touching those as a closest support. So definitely a very important place. The next important support is here, this blue line. but I think we can have a reaction here. Let me check the Fibos from the latest upswing. We have to change the colors to see it better. Okay. They are not playing part right now, those Fibos. So we can remove them. There is no point to use Fibos if they do not work in one particular situation, because obviously Fibonacci retracement they work, and they work very good. But if you put it on a chart and you don't see that the price is respecting those, you shouldn't be forcing yourself. You shouldn't force yourself to use them, right? So here, a nice place for a bounce, possibly, but what we are missing here is a reaction, is a bullish reaction. I would like to see a demand here. I do not see a demand here, so for me there is no buy signal here yet. And I think that the buy signal here would be created once we would break a bounce from here and break the upper line of the flag. American dollar to Mexican peso had kind of a false breakout above the trend line. The price came below and even broke this lower line of this wedge and lower line of the second wedge, and came below this support, but now they are coming back. So the situation is not so clear. I don't think that those signals from breakouts of those lines can be legitimate and can be respected. I don't think it's the issue here. So I'm not gonna force myself to look for a trading signal here. American dollar to euro to American dollar bounced off this horizontal resistance here. First there was this very good buy signal, but it's over. Those who used that, those who didn't. We had a long position here, also closed on break-even point. So no loss, but no bigger profit as well. Now we're defending this horizontal support, and I will remind you why this rectangle is so wide. Because this upper line is a support from 2015 as far as I remember, and this lower line of this rectangle is a resistance from is a support from 2016. So those were tops from those years, and now they are used as a supports, as supports. So first here and then here. So actually this is a very good support. There is another resistance here. Okay, there is another resistance here. And if the price will use this support and then go higher, come back above the trend line, and then break this horizontal line, and then this trend line, that will be a full buy signal. Even the price will create inverse head and shoulder pattern, so left shoulder, head, and right shoulder. Currently, buyers are fighting for the right shoulder on this formation, on this chart. That's very interesting and a promising situation here. Next instrument is American dollar to Japanese yen, where we broke the lower line of the symmetric triangle formation, but the decline was stopped on this horizontal support, and actually good, because it proves that sell signal will be triggered once we'll break this horizontal support. Now the price is coming back above the lower line of this triangle, which can be considered very bullish, and as long as we stay below above this blue line, there is no sell signal here, no sell signal whatsoever. We can try to estimate how deep will the price go. leave the Fibos, and we can see that 38.2 Fibonacci level is in line with those price movements. So we can estimate, well, we can assume that 38.2 Fibonacci level can be a strong resistance here. And the next one, traders, is gold. Gold, which was defending this first horizontal support, but as you can see, as we speak, this support is getting destroyed at the moment, and most probably the price will test this one, which is more relevant from this one, and even the more important here on 38.2. This is absolutely crucial in terms of this technical situation on this instrument. It was respected here, 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 and at the same time it's 38.2 Fibonacci level. So definitely as long as we stay above the red area, the sentiment is still positive, right? We're gonna suffer this bigger correction here. Actually, we can try to I can show you the potential correction equality pattern that we will be able to, we can get ready for that. It does not have to happen, it can happen. Let's see when it will be here. So apparently we're very close to the correction equality pattern. This is another potential support. It comes in line with 23.6 Fibonacci. Right, but in my opinion, as long as we stay above 38.2, we are relatively safe. It's not perfect, but it's still not bad. Silver is now trying to defend its nemesis, which is 16.8. This is a ultra important support and resistance in this year, in 2017, right? It started at the beginning of January. As you can see, it was support, support, support. After the breakout became resistance, right? After the breakout, resistance. After the breakout, support, support. After the breakout, resistance, 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 resistance. After the breakout, support, support, and now is becoming a support as well. As long as we stay above this level, sentiment stays positive. But we are very close to the breakout. As you can see, they try to break it, but we can see a bit of demand here, which can be promising for the buyers. But the situation is very dynamic at the moment, and it will develop. I don't think that it's so far it's a good occasion to buy, because on H1 candle we do have a hammer, but H1 candle is here for only 19 minutes, so everything can still happen with this, and the price can easily drop down. And the star, which is S&P 500, in my opinion, it's V-shaped retracement, right? If you're following American stocks, American indexes, you shouldn't be surprised. So we had this drop. Last week was really eventful. We went from the all-time highs to the very lows, to the lows from the 12th of July. This drop was very sharp, but those kind of drops happened here, for example here, and happened many times recently, and every single time on American stocks, those drops were stopped very rapidly, right? Those drops stopped with V-shaped retracements, and this is another one. So look, from the all-time highs, we broke that support on 2484, this one on 2465, 200, 452 along with the lower line of the channel up formation. Those pink lines is a channel up formation. We went here. I was really hoping that the price will touch the trend line here, so that's why I highlighted this yellow rectangle. I thought that the price will try this support or this support, but in general we'll try to test the trend line here, but instead of doing that they stopped a few points above, 20 points above, and they went significantly higher. If there were traders who hesitated, they were waiting for a double bottom or a head and shoulder pattern, they probably didn't use this reversal because you had no chance. And times when you have V-shaped retracement, you don't have a confirmation. Here, the price just entered the buying mode and the price goes up. You have no confirmation here, like a double testing or something, or an inverse head and shoulder pattern. The price just went mad actually, and we came above horizontal one, lower line of the channel up, horizontal one, and went significantly higher. So there's just one resistance left here. From those four, just one is left. So the sentiment is definitely positive. Next instrument is Euro to Australian dollar, which is in a very positive situation here. So we had an uptrend, we had a flag. Flag is a trend continuation pattern, and below the flag we had a consolidation. And always when you have a consolidation below a resistance, sideways trend below the resistance, it means that there is a higher chance for a breakout, and the breakout actually happened, and they used the recent resistance as a closest support. So that was a very technical breakout. I like it, as you can see here. Okay, not even like that, like that. And now we're having a sideways trend again. Resistance here. Most probably the price will continue to climb higher, but first they need to break that horizontal resistance here. But sentiment on Euro to Australian dollar is definitely positive. We do have a nice trend line here. Let me readjust that. Okay, it looks more like that. Maybe let's change the color. So what we do have here is a nice support. If the price will come back to this area, we should expect a bounce. Obviously everything can happen, but here, bullish price action here, bullish engulfing or a hammer, that can be a good occasion to go long. Dollar index is coming back above the downtrend line here. We do have a horizontal resistance. As long as we stay below the yellow area, the sentiment is not fully positive. It's not fully positive, but I think that one can think about buying only after we'll break this yellow area. Right? For me, there are still high chances for a reversal here, especially after the last H4 candle, which is a shooting star. Maybe this one is not following that, but it just proves that there is a strong resistance here. British pound to Japanese yen made a very technical movement, so we broke the support. Then the price tested this as a closest resistance, and as you can see, the test was so far positive. Was so far positive for the sellers. And on a daily chart, we do have a shooting star here. If this day will end up like that, the chances for a downswing will be very big. Euro to Japanese yen was trying to have this inverse head and shoulder formation. We are slightly above the, well, we are fighting on the neckline level, but what we are having here, I think this horizontal support will be more important than this neckline. So as long as we stay above this horizontal support, the sentiment is kind of positive. But sentiment stays positive because that's what the trend is, and I would say that as long as we stay above the green area, we are in an uptrend and we should remain in an uptrend. New Zealand dollar to Japanese yen is having a small comeback here, but it will be just an occasion for sellers to go to open new short positions, because that's what the trend is here, and they can use that line for resistance, that horizontal line for resistance. They can use this 38.2 as a resistance. We have many places where they can retrace, even here. Okay, just let me remove this false breakout here. We can adjust it properly. So where do we have potential resistances? For example, here. Combination of two Fibos and price action from here, here, here. Okay. It can be nice. It can be a good one. American dollar to Chinese yuan. I'm waiting for the price to get to this blue area. Once the price will get there, that would be nice to see a reversal here. As long as we stay below this green area, the sentiment is negative. American dollar to Polish zloty is heading to the closest resistance here, which will be a combination of this horizontal one, but also upper line of the channel down formation. So here, if you will see any bearish price action on this area, that will be a good occasion to go short. Okay, let me switch the accounts and I will be able to talk with you about oil and about DAX. Okay, we do have an oil here, and last week I told you that just touching this level is not a good occasion to buy. Just break out of this upper line of the pennant. What you would like to see is the breakout of this resistance, and luckily none of you opened long position here, because as you can see, the price did what was expected, so bounced off this horizontal resistance. So actually we can remove this those lines of the pennant because they are not relevant. They use this rectangle to go lower, to break the support, not the resistance. They also used the recent upper line of the wedge formation as a support. Then they tried to enter the rectangle again, but without a success. So they broke that line again and that line again. And what is significant here, that they broke this lower line of the wedge, and they used that as a resistance here. Okay, this line we can remove, I would say. So we can estimate another horizontal resistance here. So the price is back again below the trend line with a negative sentiment, which shouldn't be a surprise for the oil traders. Where is the closest support? It's 38.2. It should be still, it should be relevant, right? Here we are actually currently on the closest support. When the price will go below 38.2 Fibonacci level, that should trigger a sell signal here. Now we should have data from the US about retail sales. Let me show you the reaction. I'll switch the accounts. Apparently, from the market reaction, we can estimate that the data is slightly better than expected, because American dollar is gaining strength. So the retail sales was expected 0.3, and American dollar is stronger, so from the market reaction itself we can expect that the data was better, and retail sales was 0.6, so twice as big as expectations, and core retail sales was 0.2, also better. Empire State Manufacturing Index was 25.2 instead of 10.1 expected, so a good data for American dollar. So most probably gold is heading lower, yes, and silver crashed the 16.8 support, yes. Maybe it looks like loads of traders had stop losses here, that's why those movements are choppy, and we probably have an activation of many stop loss orders here. So yes, we do have a good data for American dollar, and now many supports will be crushed. We'll have an occasion to check if gold will respect this correction equality pattern or not. We will see if the silver, well, that can be a problem for silver. That can be a huge problem for the traders on silver. Yes, so this bullish action on cable can have problem here, right? Yes, so we do have a new lows. So for many instruments, the data about retail sales came just in time. And that can have a profound impact on many instruments, on the midterm situation on many instruments, because on many instruments of, for example, Australian dollar to American dollar, yes, what we are having here is a big test of this important support. So far, no buy signal yet, because you don't see a demand here. You see a supply. Supply is winning so far. Supply is making new lows. There is no demand here, so there is no option here to go long. Going long here is just very risky, right? Because you're not joining the demand, because as you can see, there is no demand here. Okay, I'm happy that we could watch the reaction live, and we have to follow that. We have to stay on the charts right now, and because we do have many interesting movements. So if you want to learn how to trade, I guess now it's a good time to find out how the market works. Obviously, try not to enter with on a real market if you don't feel confident enough, but on a demo account you can try, you can check if you like it, and now it's a good time to trade because we have nice volatility, and the price is on good levels on many instruments, and I hope you will enjoy that. Now we'll have a break, and after that we'll have a webinar about basics of the forex trading. If you want more information about trading, more trading setups, visit our Twitter account and our website alpari.news. Thanks very much and goodbye.